Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about PIC once again. Now, if you haven't watched my previous video, I'll recommend you watch it after this one. Now, this is going to be a standalone video, so everything you're going to hear here, you're probably going to be able to create an educated decision out of. Now, nonetheless, I'm going to go through technical analysis a little, just to give you a perspective of the psychology of traders, and then moving on towards the due diligence part. If you want to skip through that, it will be somewhere around a third into the video. Let's jump right into it. So, on a 1 week perspective, what we get to see here is a bit of a nice push on the 1 week perspective on the MACD. ADX is still showing in a very strong indication of a trend. The trend hasn't broken yet, but above 50, that's where you start worrying about it, because that's where you're probably going to start seeing reversals. Momentum have reversed a little, and the willing percent R is sitting a little bit closer towards neutral. Moving averages are extremely bullish. Now, while I'm switching here, make sure to drop a like to this video to help the channel grow, subscribe, and notifications on. Now, 1 day perspective, what we get to see is 10 SMA is above 30 EMA, stock is above 50 SMA, and is above the 200 SMA. So bullish all around on the moving averages. ADX still shows in, it has a little bit more juice before it drops, but as we can get to see, it's seen two massive red candles. But here's the thing that is interesting. It closed 1403 last evening, and then today it opened around 1473 and then continued to drop. What is that telling me? It's telling me that people are taking profits. Or it could be some short selling attacks. Although I doubt short sellers are attacking this one, especially when XL Fleet does have revenue. Why would you attack something that has potential of long growth? But I mean, that is just speculations from my side. MACD here shows it a retraction, so that's a little bit dangerous in this level, and it's kind of giving you a warning between willing percent R, momentum, and MACD, and the red candles to hold on. You might want to start cashing out a little around the $15 range, and then leave some for the rest. That seems like a good strategy. Now, between the 10 SMA and the 30 EMA line is the trading action zone. Currently, it's barely clinging on. Below 1365, it's considered bearish on that sense, but it still has until 1304 to officially be declared bearish. Now, hopefully that doesn't happen. Willing percent R is currently at the bottom level, which means that it's currently oversold. MACD is a little bit curving up. It's a little bit of a mess on the MACD, so it's more of trading sideways than curving up. Momentum is also sideways. So, taking a quick look now into the moving average band. So, it escaped the moving average band with quite a while. And what I like about this volume, and take a quick look here into the volume. You've seen this massive jump in volume before, and then it went quiet. Over here, it's more of a distributed, well-balanced. It's not a pump and dump, as you can get to see, or at least not an obvious pump and dump. Only time will tell. I don't think this is a pump and dump. I think a lot of investors are rushing in because they recognize that XL Fleet has revenue, and it has potential. But you can get to see by volume here, 2 days of volume, and then it died. Now, on the willing percent R, we got to see a little bit of different things like, hey, it's overbought, oversold on different indicators. The stochastic fast and the stochastic slow are one of the amazing indicators that tells you if it's probably going to see another push or not. So on the stochastic fast, it's really not showing anything. It's been showing that all the way since around 1077. Right now it's at 1376. You can probably argue it says, hey, you might have another push, but be careful. And the slow is a little bit curving down at this level. That's a little bit of a dangerous level where it says you might want to secure profits. Now, current Fibonacci retracements levels of resistance and support goes as follows. So for resistance, we have 1459 and 1585. For supports, we have 1361, 1291, 1222, and 1136. Now we can take a quick look into price lines for supports and resistances. 1375 seems to be the current support. Now what we can do as well is 1 month, 2 hours. Sometimes when you get a little bit of a massive jump, you need to know the basic levels of resistance and support. Go here to price line, and then current support sits at 1352, 1343, 1307, 1269, 1250, 1209, 1185, and then all the way down to 1147, followed by 1134. Current significant resistances sits at 1397. Above there, we're looking at 1434, and above there, we're looking 1443, and then up to 1498, and then all the way up to the beautiful mark of 1525, and then 1505. Now comes in a little bit of an overview about this company. 4 main products: XL Hybrid, XL Plugin, XL Link, and XL Grid. XL Hybrid is basically delivers a 25% miles per gallon increase and 20% reduction in carbon dioxide emissions for class 2 to 6 fleets. They're available on major platforms such as Ford, Chevy's, GM, and Isuzu's. XL plugins are basically a plug-in system that installs seamlessly into F-150 and F-250 plug-in trucks, pickup trucks. Delivery is it delivers a 50% increase on miles per gallon and a 33% reduction in carbon dioxide emissions. Performance in meets substantially carbon dioxide emission reductions. XL Link, it provides fleet with actionable intelligence on their vehicle electrification metrics and emission reduction summary. So basically this is more of a system where you go on through an app and you can check your vehicle's performance as well as you can track them down. Really useful for different companies where they have a lot of fleets of vehicles that they want to track at the time. XL Grid is basically a charging and power solution for fleet electrification and includes an EVSE station equipment and data-driven site analysis. If you want to get to see a little bit more about this, including the kind of vehicles, everything in between, you'll find in the description below my previous DD, or my original DD on this one, where I dive through every single thing you need to know. This, nonetheless, will have everything you need to know to make an educated decision, but if you want deeper, there's the video. Anyway, 2.5 million gallons of fuel saved a year, around 25,000 metric tons of carbon dioxide, and 20,000 hours of driven productivity added. So quite amazing. And we're now going to pivot on towards the investor presentations. We've already covered this because this is September 2020, so nothing new. So we'll move on from there. The current news here. What I like is there's a lot of news here, news releases that are not even in the SEC filings. So that's amazing. Make sure to capitalize on this one here. So, currently XL Fleet launches its XL Grid division with charging infrastructure solutions. XL Fleet expects its 200 fleet customers to require at least 100,000 charging stations in the next several years based on growth demand for electrification solutions. XL Grid provides charging infrastructure, energy, and power solution for fleets and advances XL Fleet electrification as a service offering. And so when you look into XL Grid, I was just reading about it over there for a small pamphlet they have, this really shows in growth potential because it's not only XL Fleet where they do modifications for vehicles, but it's also supplies a grid for electric outlets for vehicles like that. So it's quite interesting to see. Now, let's jump right into the institutional buyers. Institutional buyers still seem to be bullish on this one. They haven't really decreased their positions. You had a few way back around 2 weeks ago or a week ago, actually 2 weeks ago, decreased their position in the massive dip, and I'm pretty sure they're punching the air right now. So, lost on them. Current SEC filings is bit more about the details of the mergers, and nothing here significant in my perspective. And then moving on is the insider purchases, and you get to see that it's still quiet over there. Now comes into, hey Ed, what do you think is the next things happening? Now, first and foremost, I don't cover other people's analysis. I've had comments before saying, hey, look at this analysis that have basically said this will jump to $20, this is why it's jumping. I don't think that that is the case, and I think that a lot of the times, if I were just go on and cover other people's analysis, I'm going to be spending here all day. I'm giving you enough information to give you a perspective to what's going on, and a trader psychology. Now, currently here, I'm working on a current new Discord. It's totally free. If you would like to join it and discuss with technical analysis, questions, and trade with us during the day, you'll find it in the description below. It's totally free. I'm not selling you anything. I'm not into that. Next thing is, what do we think about this push? It definitely looks like an uptrend, because take a quick look at this, right? You start jumping around this area here, and then you see a bit of pullback, and it jumps, pullback, and the jumps, and then all the way on the 27th, you get to see massive push. Sure, some of it was fueled by a little bit of pumping, okay? But I'm going to ignore that. And what I'm going to say here is it does have a strong future. Below, I would say the $13 mark, sure, start considering selling and cutting your losses on that period. But I think it's long-term potential because we're meeting between heavy duty. Remember, they have class 2 to 6 vehicles for their hybrid. And a lot of these vehicles, if you work in construction, a lot of them take a lot of gas. Okay, and the big problem with that is a lot of these vehicles aren't designed to be hybrid, and so having such a solution is amazing, and it kind of bridges that green and emission change, especially with considerably a Biden administration proposing a little bit more on cuts of carbon dioxide emissions and a bit more about the green energy. This would definitely be on the top. And so in terms of an investment, it looks solid. And here's why. And what we get to see is a bunch of different SPACs before actually did see drops after a merger. And the argument here is, hold up, this one does have revenue. Why would it see a drop? It still has a lot of potential. It's still selling. It has a product. And so it is a solid SPAC in my opinion, and I think it has future. But the good question is, are you trading or are you investing? If you're investing, you know, just try to have a little bit of an average, lower down if it does dip, and then leave it on for 10 years. That's what investing is. But if you're trading, then you can start riding in a bit of the trades, buying a little bit low, sell around 16, buy again around 13, 12, probably the support would probably be around 13 before it bounces back again, and then jump back up to 16, 20, and then sell. You know, that's your thing. That's if you're trading. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.